Welcome everybody to the Feeding Frenzy Friday. My name is Brian. This is where we break down the Friday featured asset from Notes Direct. If you're someone looking to buy notes and you want an expert opinion, this is the place to be. We have Scott Tyler, a veteran of almost 30 years in the note business, giving us his thoughts on these notes. If this is a value to you, we would love for you to just smash that like button. Make sure you subscribe to our channel, click that bell notification so that you get a notification every single time we post one of these videos ahead of the emails. Let's go. All right, Scott, so what do you got for us today?
Hey, Brian, what we have today is a two-unit property. It's not a single family. Looks like a single family, but it's actually a two-unit property. I think you have 7 total bedrooms, a couple baths, little under 3,000 square feet, 2-car garage, detached garage. So yeah, a little different than what we usually post on the single family residence, right?
Yeah, absolutely. So it's a really big house, and you've got both sides, which is interesting. So what's the story with the borrower? They live on one side and rent out the other?
Well, that is the story that I believe is accurate. I don't know for a fact, but I believe he is living in one side and renting the other, like you said. I don't know what that rent may be. I looked up average rents in this area, and they're going for about $800 a month.
Wow.
So let's say that's happening here, right? So he's covering his P&I. I think the P&I is $450. Heck, he's even covering the T&I with it, right? With the one payment if he's renting it out for $800 a month, right?
Yeah.
So yeah.
Man, so you know what my favorite part is? I got to tell you, the thing that jumps off the screen to me.
Yeah.
It says the note date was 1997. This borrower has been there for, I can't do the math because it's too long ago. I mean, that's unbelievable. So when we talk about borrowers being committed to the property, right? What is their incentive to pay? When you've lived somewhere for
24 years,
years, you are in this thing. And the fact that he potentially might be living in one side and renting out the other, he might be living here essentially at a net, a break even, or maybe even as at a positive. So this is really interesting scenario. Talk to me a little bit about, I see that the estimated market value looks like 50,000, but I was looking it up online. And it looks like that this valuation was it happened to be right during kind of the COVID times.
It did. Yeah, you're exactly right, Brian. If you look at that evaluation date of March 6th, 2020, that was right when, I think the lockdown started across the nation, right? Everything started happening about that time. Not saying that that it's a bad value. That the value at that time may have been 50,000, but what I've seen, and it looks like I've seen the same thing that you have, is that this house is different sites is about $75,000-$80,000 is what the online values are showing. So that's a huge difference investment to value based upon that 50,000 and the 70 or 80,000.
And this is a good reminder for everybody who's wanting to buy notes, right? When you're looking and evaluating a note, one of the things you have to figure out is just because something says it's a value, you need to look at the date associated with that, right? A lot of times when you're buying a note, the first thing you want to do is get an updated value, especially in a market condition like this. Guys, the markets have been going like this. It's really important to understand your risk associated here and get a much better up-to-date version of what that's going to look like, and ultimately be able to look at maybe projecting what that could look like in the future. And so I really like that, that gives us a lot more margin in the deal, puts us probably about 55% investment to value. Isn't that right, Scott?
Yeah, that's about right. I mean, you're under 60% now if it's the $70,000 to $80,000 value, which, man, like you said, I think it is. We got an older value here. If anybody wants to purchase it, go get a new one, obviously, and see what it comes in at. They're not real expensive, right? I mean, it's part of due diligence. And hey, when you do that, it may come in more than 80,000, and you really even got a bigger slam dunk. So
yeah, and as always, this is a performing note, right? So you're expecting to just get your paycheck every single month. I mean, we got a really committed buyer. His payment is insanely low compared to going out and renting in the area, especially knowing that he might have potential income from the other side. A lot of the incentives to keep going. So there's a pretty good looking note here. And think about this, worst case scenario, right? They stop paying, what potentially happens, right? We start moving and having the conversation about, well, now it's a non-performing loan. Let's go all the way through that worst case scenario. You get a house. I mean, you could rent this thing out, $800 aside, right? $1,600. I'm pretty sure when you buy something for $40,000 and it rents for $1,600, you can make that math work, right? I also looked at it, Scott. I'll just tell you, I saw 7 bedrooms that close to Niagara Falls and immediately thought vacation rental, Airbnb, right? Like I know there's a whole bunch of people watching this that is on the horizon. But again, we're trying to be the bank. We're trying to be passive. And this is the type of investment. What's really nice about reducing our risk is understanding that even in the worst case scenarios, as the bank, we have an upside, and that's really powerful.
That's right.
Well, thank you so much, Scott, for taking some time to walk through that with us. If this asset is for you, make sure you do your due diligence and then go and click that purchase button. Go out and make it happen. Take action. If you want to see more notes, make sure you're subscribing to the channel. Make sure you click that bell notification to get the latest updates so that as soon as we post these videos, you're getting the information ahead of the emails. If you're new to notes or you want to learn more about notes, you should register for our one-day deeper dive class through our sister company, Note School. It is a one-day deeper dive class to cover everything from creative financing, creating your own notes, learning how to wholesale and flip notes, things like performing notes and selling partials, what it looks like to make some big money with some bad debts through non-performing notes. It's a wonderful full-day class. You could register for that class below. For the rest of you, I hope you have a great week, and we'll see you next week on the Feeding Frenzy Friday.